what time zone you are tuning in from. And I'm excited to welcome you to the midweek session of our Forex Morning Mastery as we prepare for the second half of the week. Well, it has been, in terms of technicalities, it has been a challenging week for me. I've not been able to come online the way I used to due to internet reception issues in this area that I came into. So we've been battling this for about 48 hours now, but thankfully, I think we have a sense of comfort in this present ISP that I'm using right now, though it costs a lot of money, but I'm just glad that we are able to come up with this so that we can. So please pardon me for missing out on Monday's session as we were not able to run the Forex Morning Mastery, but thankfully we are back and I'm glad to be with you all this morning. And of course, we've had some interesting runs. As you who are following me on both my TradingView Telegram platform, especially on the gold commodity, after dropping that video during the weekend, we've been able to make some significant that particular trade. And of course, we're looking forward to new trading setups today. If you're a fan of the gold commodity, you do not want to miss out on this session, so please stay tuned in. My own name is Sheriff Daramola, and for the next 30 minutes to 45 minutes, depending on how long this is, I'm going to be your host as I take you on a trading journey where we shall be evaluating the financial market together. I hope you're ready, guys. And for those who are joining us for the first time, you're highly welcome on board. Very excited to have you here with me this morning, and I do hope that this will be of immense help in your trading decisions today. We run this session 3 times in a week, that is Mondays, Wednesdays, and Fridays. So that is what we do week in, week out here, and it's important signal service platform, but instead an avenue where we all come together to learn, understand the dynamics of the market through the lens of price action and fundamental, with the utmost intent of strategically positioning ourselves for the next move. So once again, you are highly welcome on board. And I do encourage us all to actively engage in the comment section. So with that said, here we will be delving right into the charts. I need to know if we are page right now, because I'm beginning to see some itchy. Hold on a second. Okay, I think we are back on, right? If you can see me, if you can hear my voice loud and clear, if you can see my screen, please let me know in the comment section. Okay, so what do we do right now? I think, okay, the first thing we are going to be doing is to keep tabs with the fundamental factors that are currently influencing the sentiment in the market, right? So I'm trying to locate where my screen is, so I will be with you in a moment. Hold on a second. Okay, I think we're good now. All right, so as you all know, the first thing we normally do is to keep tabs with the fundamental factors that are influencing the sentiment around the US dollar market dynamic, which is very important for us if we are to trade the assets we usually monitor basis. So I'm talking about the US All Spot, right? We're talking about the USDJPY, and of course my favorite, the XAUUSD. And of course this week has been quite interesting. Look at what we have on the screen right now. This is the DXY index, an instrument that gives us an overview into the performance of the US dollar across board. And after capturing the character of price action since the beginning of May of this year, it is quite obvious that the dollar hasn't been doing very well at all. We've seen price continue to find lower lows, lower highs as a result of the decline in the value of the US dollar. And though we had a little bit of a breakout here mid-June, but price dropped back below the structure before the end of the month of June, and the decline continued into the $96.35 level. And interestingly, the technical setup we are seeing here is a descending channel, which is a downtrend market sentiment. And the fact here is that price remains within the descending channel, which further emphasized the weakness of the US dollar at this point. Now, with that said here, what are the fundamental factors that is influencing the US dollar and the US dollar this week? Now, let's talk about the negative drivers since the market has been on a downtrend scenario. First of all, the anticipation of rate cuts is very, very high at this point, where majority of market participants are anticipating a Fed cut in September or even this month, July. Then we also had some weak data from the US economy last week. Remember, we were talking about the US GDP report, which came in showing that the US economy contracted by 0.5%, which is not a good signal at all. I think this is going on for the second consecutive quarter. And besides that, we also had some labor-oriented data last week. So I want us to look at the data that has been coming out from the United States this week. And I think my economic calendar is taking some time to load up. Let's give it a couple of seconds, maybe a minute, depending on how sooner or later it's up, right? So I think I have to refresh that page. It's still taking some time, please. And in fact, I want to see both the medium and high impactful events for this week. That is what we want to look at. So we can have a picture of the major influencers in this market. Okay, so so it still did not bring up the calendar I wanted. So I'll re-impute and then apply. Okay, I think we have it right now. So I'm looking at this week so far. As you can see, the week started on the 30th of June. We had a couple of speeches. The Fed chairman spoke yesterday. We had the ISM services PMI. That was ISM manufacturing PMI, sorry. And you know, this ISM manufacturing PMI is the Purchasers Managers Index, how well the manufacturing sector in the United States is doing. And it comes in the range, between the range of 0 to 100, where anything above 50 is considered to be an expansion in that sector, and anything below 50 is considered to be a contraction. So if the data comes in above 50, it shows that that sector is resilient, which is obviously going to be going to rub off positively on the US dollar. And if it comes in lower, then it could rub off negatively on the US dollar. Now, if you look at what we have here, data for the ISM manufacturing PMI came in at 49. Now, this is way below, this is below the 50 mark, right? But it comes in positive due to the fact that market participants, economists were expecting a 48.8, which was higher than the previous month. And of course, seeing 49 looks promising, showing that that sector is recovering at a steady pace. And we're looking for maybe in the next couple of months that we could see this figure come back above the 50 mark, right? Then we also have the JOLTS opening. This is a label. Of course, we saw a 7.769 million, way higher than the previous month, which was pegged at 7.395, and above 7.3 million, which was the expectations from economists. I think besides this, there are no other major events for this week. There are none, I guess. There are none. Hold on a second. Okay, so there are no other one. Now, looking at the fundamentals, Trump tariff is still very much on the table. And this threat for this tariff is creating policy uncertainty. Remember, Trump is threatening higher tariffs on Japan and pushing aggressive trade rhetoric week in, week out. And this obviously has created economic uncertainty. And the Fed chairman yesterday went on to admit that the Fed might have eased already, if not for this, tariff situation, that the Fed might have cut interest rates. Now, the impact on the market is when this uncertainty like this continues, it may drag on the US dollar strength, especially if markets see Trump's stance as destabilizing. However, in recent time, looking at what has been going on here in the last 24 hours within this old range-bound structure, that is the descending channel, you will see that as soon as price tested the $96.35 level, that was yesterday morning, sellers were unable to break through, and in fact we're beginning to notice that the US recovering within this descending channel. Maybe this could turn out to be a reversal setup that could lead to price breaking out of that resistant line of that descending channel. And though the dollar still remains very vulnerable at this point, but monitor how the market participants are thinking about this current situation. And one thing I would like to say here is that we do have some big data ahead of us this week. For instance, today we are looking at the ADP employment change. This is also a labor-oriented data. We want to see how the labor sector for this is 12:15 p.m. UTC. That's about 1:15 p.m. local time. Then besides that, we also have on Friday is it Thursday? Surprisingly, this is coming on Thursday. Okay, so on Thursday we have the average hourly earnings, a labor-oriented data as well. We have the initial jobless claim count, a labor-oriented data as well. Then we have the almighty non-farm payroll, all coming up simultaneously tomorrow at 12:30 p.m. That's UTC, that's 1:30 p.m. local time. So everyone is definitely looking forward to this report. Then the ISM Services PMI is also coming in 2 p.m. tomorrow. This one gives us an insight into how well the service sector is doing in the United States. Remember, the service sector is one of the biggest sector in the United States, could play a significant role in influencing the strength of the US dollar. So this report here will likely decide whether the dollar continues to weaken or rebound as the new month began. So with this understanding in mind, we can see from the chart is being cautious at the moment, trying to wait for this data to come in before making any aggressive bet at this point in time. So I'll see this as a consolidation ahead of especially the ADP coming up today. So if it comes as a reversal setup, we could see the beginning of a US dollar strength. Now, how is this going to be influencing the assets we are monitoring this week? So the first asset we are looking at this week is USOILSPOT, right? I've had a trade on the USOILSPOT since Monday, and it hasn't been doing very well. The market has been in a consolidation since Monday's trading session, as you can see on this chart. So this is the 4 hours time frame, and oil appears to be stocked in a tight range. Look at what is going on here between the $65.50 level and the $64 area to emphasize the prevailing uncertainty at this point in time. So it appears we do not have any strong direction at this point in time. And this reflects that traders are being cautious because the market is getting mixed signals from both supply and economic news. Now, on one hand, peace in the Middle East means that more oil is coming, that is increase in supply, and a stronger US dollar will be also putting downward pressure on the price of oil. Possible. Well, when the value of the US dollar increases, the US crude oil, being a US denominated asset, will definitely become very, very expensive for other currencies to buy. And that's what happens. Demand reduces, downward pressure is placed on this commodity, and it could push price to the downside. Then on the other hand, hopes of rate cuts is expected to weaken the US dollar. Major reports this week are also offering some support in that regard. So if we see reports from the United States that brings in some weaknesses, we could see the dollar drop, and if the dollar drops, the oil could become set to buy, and this will lead to an increase in demand, which obviously will favor the US crude oil. So at this juncture, the market is waiting for clarity, especially from this week's labor-oriented data, which I shared with you earlier. And of course, we are also looking forward to the OPEC plus the 6th of July. There is less risk of oil supply being disrupted, which takes away some of the fear that was helping to keep oil prices high. And that means that more oil is coming in. In fact, OPEC has also planned to increase oil production against August by 411,000 barrels per day. And we all know what that means. More supply in the market equals to downward pressure on prices, especially if demand doesn't rise. And if the dollar continues to get stronger as it's recovering at the moment, it is not very, very good for the price of crude oil. Now, on the other side of the pond, we will want to see the economic events, which will be giving the dollar some trajectory, and of course the OPEC meeting coming up on the chart here from a technical standpoint, revealing how market participants are thinking. Of course, we can see that the market is more indecisive at the moment, and the fact that price is confined within a tight range that is between the $65.50 level and the $64 area is a red flag that the market does not really have particular direction yet. Now, how do we navigate this area going into the second half of the week? So personally, I had bought on Monday's session after noticing that sellers were unable to break down this key level at the $64 area, and the inability of sellers to break through for me was a sign that market participants are seeing the US crude oil as cheap enough to buy at this point in time. So for me, that was a very good signal to buy. And secondly, we can see here that price is above that descending trend line. So you can see price broke above the structure on Monday, and since then price had continued to maintain buy pressure above that structure. So it all boils down to though we have a range bound structure, but buying pressure is increasing within this whole area. And for me to consider selling from this part, see price breakdown, retest that key level to the downside before I can start considering selling. So as long as price remains above this key level at the $64 area, I want to maintain a bullish bias. Now, when I scaled down to the 1 hour time frame on Monday to have an insight into how market participants were thinking, this was what I was able to come up with. So I initially had a range bound. As you can see, we had a support around the key level. Price remained range bound here between the $64.57 and the $64 area, and I indeed bought above the $64.50 area. And look at what has been going on here in the last 2-3 days. Price moved up a bit, snapped back into entry point, a loss. I just stayed faithful with this structure as it continues to guide me through into today's trading session, and it appears that we are doing prices moving into that direction that we are looking forward to. And if price continues to climb, well, a breakout of the $65.50 level will definitely welcome more buying opportunities. So I am looking at today on the USOILSPOT. I continue to maintain a strong bullish bias on this asset, and of course, depending on what happens with the ADP employment change coming up later today, will also determine if we are on the right side of the pond. So of course, I will be giving us updates accordingly as I continue to monitor price action from this particular area. So let's see how this is going to play out. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So, and in the absence of no questions, I want to assume that we are all on the same page, right? Isn't it? No questions means that we are good to go, right? So I just encourage us all to mark out those structures accordingly on our chart, and let's use it as a reference point to guide our independent trading decisions. So I wish us all the best of luck on this trade. So moving on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the USDJPY, right? And it appears my chart is taking some time to load up. So while we wait, the Japanese yen, though, the last 3 weeks, I think, last 2 weeks, has been dropping. Sorry, has been gaining momentum. Sorry. It has been gaining momentum. So when the USDJPY drops, it means that the yen is increasing, and of course, if you look at the structure I was able to mark out on the 4 hours time frame after capturing the character of price action in the last 8 weeks, I think 8 to 9 weeks now, it is quite clear that the dollar appeared to be gaining some traction. Not until recently we saw price break down this major ascending trend line, and in fact it appears price is back in. You can see, let me zoom in so we can see things more clearly. So we saw what happened here on Monday. Price did break down the structure, moved about, how many pips was that from the key level? It moved about 120 pips, and then we saw some recovery in the US dollar in the last 24 hours. And the reason I will say behind this recovery from the US dollar could be attributed to the new US tariff threats and improving global market confidence. However, some underlying support remains due to expectation that Japan may still raise interest rate this year. We shift some sentiments, making this whole structure a retest of structure to continue the downtrend that started last week. So for me, I'm not going to be giving up on the yen at this point in time. In fact, if US jobs data disappoints, or if Fed the dollar could weaken and the yen could regain its strength, especially if Japan stays on track to raise rates maybe later this year or even next year. So for me at this point in time, we are at a critical juncture where, depending on how price, so this price level around the 144.00 area will determine if we are going to the upside or to the downside. And one thing that makes this whole area critical is the fact that both the ascending trend line we have here and that key level at the 144.00 area, a level which had played a significant role in determining the direction of price action since the month of April, makes it a critical juncture. So what happens here today? To see things more clearly, we will scale down into 1 hour time frame. So scaling down into the 1 hour time frame, this is what I had at the beginning of the week. So this whole range bound at the beginning of the week was broken. It triggered my sell order, had the break of the 144.350 down here before the momentum came back in. Now price appears to be approaching the support line that started this week at the 144.350 area. So what is going to happen now? Will price come to retest the structure in an attempt to continue the downtrend, or are we going to see a situation like this, price coming back to retest the 144 to continue an uptrend move? So this is very, very likely, especially if we consider Trump threatening new tariff on Japan, and this creates economic tensions and uncertainty around the Japan's trade future, which definitely can weigh on the yen. Then if we also consider the new resurgence in strength of the US dollar and market optimism around it, it appears investors are feeling more confident, especially today, and buy the US dollar again. And when people feel safe like this, they leave safe haven asset like the yen, pushing its value to the downside. And if we also consider the fact that the Bank of Japan is still being cautious about raising interest rate, saying they need more proof that inflation is stable, lower rates make the yen less attractive to global investors, which makes me think that the path of least resistance at this point remains to the upside. And what am I looking out for here? So one of the first things I'm going to be looking out for today is a potential retracement back into structure. I don't know when that will start, but I want to see 144.00 area. And if I begin to notice that sellers are finding it difficult to break down the 144.00 level, of course this will reflect on the chart as continued buy pressure above the 144 or around it. I will join a buy. Then I will be looking at more buy if price goes ahead to break out of the 144.350. So this is what I'm looking at right now. So I'm looking for buying a reversal setup here, and then looking to buy the breakout retest of the 144.350. Now, if it happens that the expectations around the future of Bank of Japan rate hike begins to thrive among investors, that is, investors believe it will eventually happen, especially if inflation remains high. So I'm not sure if Japan has any inflationary data today. So let's look at the Japan economic docket. So there are any events to look out for. This belief may prevent the yen from falling too hard, as rate hike hopes may offer some support to the yen. And if the job data from the United States did not come very okay, or maybe below average, then we could see selling pressure resume. And in fact, if I want to sell the USDJPY, I would like to see price drop below the key level, retest it a couple of times, showing us that buyers are finding it difficult to maintain the current momentum. Then I want to start considering selling the USDJPY. But if that does not happen, I will maintain a bullish bias. And of course, let's see how this is going to play out into the second half of the week. So this kind of technical setup requires a lot of patience. In fact, this structure could take about 3, 4, 5 hours before it matures. But of course, I will be updating us accordingly on my Telegram platform. So I do hope I made myself very clear here. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move in to the final assets on our watch list for today. Stay tuned. Okay, so there are no questions, right? No comments, right? So I guess we're all good, and I wish us all the best of luck on the USDJPY. So moving on to my final So the final asset I'm looking at for this week is my favorite amongst them, and that is the XAUUSD. I already placed a buy this morning, and it's currently running with about 35 pips in profit. Now, before I go into the technical details for today, in this, I updated us this morning as to what I'm looking at to navigate the market. So let's quickly run through what we were looking at the beginning of the week. I shared a video during the weekend, thoughts as regards to the asset, and we had hold on a second, I'm trying to spool out. Okay, this is it right here. So on the 4 hours time frame, what I did here was to capture what is going on in this market. I think in the last 3 months, I think it's 3 months. My chart is taking some time. Okay, I think since February, that's March, April, June. That's about 4 to 5 months of historical data, which emphasizes the fact that the market is strongly bullish at this within this time frame. And you know how we use our ascending trend lines. As long as price remains above them, we want to be looking out for patterns and structures that support buying idea. Look at what has been going on. We see price respecting that ascending trend line. We saw price hit the all-time record high there. Then in May, it came back into structure. And last week, we saw price come back again into that trend line. And it was at this point I shared a video last weekend where I had my key level had the 3,260, a level which interestingly lines up with that ascending trend line. And I can remember emphasizing that I will look out for buying ideas as long as price remains above both the 3,260 and the ascending trend line, and I will only consider selling only if both the structures are broken and retested to the downside, which obviously had not happened. And after the video on this asset, I updated us on Monday morning, monitoring price action for the first 8 to 10 hours of the week, and this was what I found. So I saw the structure here on Monday, and by the time I updated also with this structure on Monday, this was what I was seeing. Price came back here. We saw a sharp move to the downside, shaking out a lot of sellers, and then shaking out a lot of buyers, and price climbed up. And it was at this point I updated us on my Telegram and TradingView platform. So I was saying in that update, indicated on the chart, that we are looking forward to a breakout retest of the 3,281-ish for us to continue the uptrend move, and then looking to add more buy positions at the break of the 3,300, which was exactly what happened. And since the breakout retest happened, we've seen price action move over 750 pips in that direction. Though I wasn't able to run all that length, I only took my TP at this trend line here. Remember, this was the resistant line of that descending channel with about 530 pips. And in the last 24 hours, we saw price begin to show signs of consolidation following that impulsive move. As you can see here, gold seems to look as if it's under slight pressure as we head into today's trading session. So we saw price drop, as you can see, went through a consolidation as the market reacts to a stronger US dollar and improved investors' confidence, as you can see here. So for me, I think the market is consolidating right now as major key players await the economic event for the second half of the week. But at the same time, the ongoing economic worries and political risk are going to be helping gold stay. I don't think that the price of gold will really drop significantly from this particular area, as we have a lot of fundamental factors favoring the gold at this point in time. One of them is the rate cut expectations. More and more traders believe that the US Reserve might cut interest rates soon, maybe even by this month of July, but more likely by September. And then we know what that lower interest rate weaken the dollar and makes gold more attractive for investors because it becomes more cheaper to buy. And of course, we also have the confusion around the Trump's tax and trade situation. Trump's unpredictable policies, from new tariff threat or to Japan, on Japan, to huge tax and spending plans, are making economic outlook shaky at the time, and this definitely will make investors turn to gold as a safety zone at this juncture. And then I talked about the economic calendar from the United States. Yesterday we saw the ISM manufacturing PMI come in at 49, which for me is weak. It's below the 50 mark, and slower growth usually boosts safe haven asset like gold as people seek to move their capital into this kind of non-yielding assets in case the economy gets worse. So at this juncture, everyone is looking forward to the key economic event for today, that is the ADP employment change coming in by 12:15 p.m. I think we are going to see some volatility. And of course, in preparation, in anticipation of this event, I do have a simple trading setup which captures the current sentiment on the 15 minutes time frame. So for those of you who are with me on my Telegram, my trading view platform, you must have seen this, but for those who are not, let's look at it together. So looking at the chart here on the 15 minutes time frame, capturing the character of price action in the last 24 hours, you can see we have a beautiful descending channel to work with. And at the time I shared this structural detail, price was around here, right? Price was around here. And I said we're going to be buying the breakout of the structure, and it appears we already have a breakout already. And if you are taking advantage of that opportunity at the break of the structure, you will currently be running with a minimum of 40 pips. And for those who took that move, well done and kudos to you. Now, for those of us who might have missed out on that opportunity, well, what do we intend to do at this point in time? I think it's time for those of us who had capitalized on that move. Please, you want to move your stop losses right now to secure some profit. Doing the same thing right now. Move my stop losses to break even. That's my worst case scenario at this juncture, while I monitor how price action is going to react to the resistant line of this descending channel. So you see, we are at a crucial juncture right now. Price has been respecting this resistant line since yesterday. Of course, we can see what happened when price got into the trend line. We saw price drop back down. It came close again during the Asian London session this morning. It dropped down, and then price is back into that area. So the question now is, will this turn out to be a false breakout or a true breakout? So time will tell here. We could see one of the two scenarios I'm looking out for here is this, one of which we could see price come back to retest the structure that was broken to continue the uptrend move. So for those of us who had missed out on this opportunity, let's see if the market will come back. So if it comes back into this area, continued buy pressure will confirm that price is going to the upside. Now, it is not all the time that price action comes back to retest structure. Of course, this is a technical, or let me say a theoretical expectation. So it's not all the time this usually happens. Now, if that does not happen and instead price continues to climb and find new highs, I'm beginning to suspect this area around the 3,340. Let's mark that level out, and I will explain to you why I am looking at that level. So let's mark it out, 3,340.00 level. Let me make sure that is right on that point. Okay, yes, it's right on it. Now, if we go to let's go to as far back as the first half of the New York session yesterday. Let's extend it out a little bit into the New York session yesterday. We can see how that level played a significant role. We saw it serve as a resistant line at some point. We saw it serve as a demand zone at some point. We saw a little bit of choppy scenario during the Asian session. And right now, we can see what happened. We saw a shooting star candle here during the last candle. And look at how interestingly this also lines up with the resistance line of that descending channel. So if we can see continued buy pressure around this area, it will welcome more buying ideas. So at the moment, as long as price remains around the 3,340 or above the resistance line of that descending channel, to a bullish bias. Now, in as much as we looking to buy the gold commodity at this point due to the fundamental factors that support it, I want us to take note of the slight rebound in the US dollar we have been noticing in the last couple of hours, especially as market participants anticipate which data is coming in today again, ADP employment change, right? And of course, the average hourly earnings coming up tomorrow. Major event like this are coming up. It is common for investors, market participants to reposition themselves, buy the US dollar ahead of that event and then drop it if it favors, it doesn't favor the US dollar, make it of that transaction. So because of this, we need to be very, very careful around here, as the price could drop from this particular area. It could drop, so please, we don't want to ignore that possibility as well. So the US dollar, though, has bounced slightly from its recent lows. A stronger dollar typically makes gold more expensive for non-dollar buyers, which can drag gold price to the downside. And this understanding lines up exactly with this beautiful confluence we have here. So anything could happen. For those of you who are in this trade, please move your stop losses, secure your profit, and we could see a situation where price could drop down like this, retest that structure and go to the downside. But for me, from a long-term perspective, I'm not looking to sell at this point. I'm only looking to buy the gold commodity, and the only condition that will make me consider selling from a long-term perspective is if this support line here at the 3,329 level is breached and broken to the downside. So to give a visual illustration, I want to see price break down, retest the structure, then I want to consider selling. Now, for those who are scalpers, day traders, and the likes, you might want to capture this move here. I think it's about 75 pips move from this point to this point. So if you see something like price dropping and finding lower lows and lower highs to drop below the 3,336-ish, then you might want to look out for some selling ideas, maybe into the 3,329 has the TP target. But for me, I'm not doing that. I will just hold on to looking out for bullish ideas and will only consider selling, since I'm a long-term trader, if price breaks down the 3,329 level. So it's a simple trading setup we have here on the gold commodity. We have a descending channel in play. The last 2 hours have seen price consolidate around the resistance line. So we are waiting to see if this turns out to be a true breakout or not. And of course, this candle here has about 2 minutes for it to close. So let's see how the market is going to play around this particular area. So if anything new comes up, definitely update us on both my trading view and Telegram platform. So for those of us who still have the buy position running, move your stop losses, secure your positions while we continue to monitor price action. So that is my simple view into the XAUUSD for today. I hope I made myself very, very clear. If you have any questions, I would love to hear from you. What are your thoughts and what you think about the market? Or if you need some clarity into what I've just explained, let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any before we start rounding off on today's Forex Morning Mastery. See you soon. All right. So in the absence of no questions, I guess we have come to the end of today's Forex Morning Mastery. I think we spent close to an hour doing this, taking on the USDJPY, the USOILSPOT, and of course the XAUUSD, where we were able to identify simple trading setups that we will be using to navigate this market today. I do hope we marked them. If you have done so, well done, kudos to you. So all we need to do right now is exercise patience and allow the structures to. For those who joined us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. If you did, why not join our subsequent edition, which is coming up on Friday, 9:30 a.m. West African time. That's 8:30 a.m. UTC. As we come here again to review how well these assets have done and of course prepare ourselves for the final trading day of the week. So I want to wish us all the best of luck today. Happy new month, everyone. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.